Hello and welcome to Landy's Crypto Corner. Today is February 16th, 2023, and we're going to start off today by looking at, of course, as always, at Bitcoin spot price action on the daily. I am your host, Dr. Crypto Landy. We're just going to kind of jump right into this. Let me exit full screen mode here. Got it on the 5-minute chart. Let's go ahead back to the daily. So you can see that from the analysis yesterday, the candle that we had on the 15th, which was yesterday's candle, it's the day before. It was the 14th into the 15th. Now we've got, 15th is when it closed. We have another one that closes today, or that closed today. This was yesterday's candle. And I had spoken about closing on or above the second standard deviation to the upside here, and what that would mean for price action intraday, possibly daily. And in this case, we did run up and hit the third standard deviation to the upside here and got a pretty strong rejection. So if we throw on a few more tools here, let's go ahead and flip over to hide indicators. And you can see that we have the value area range tool, the volume profile tool. And we have re-entered the value area high. And technically, the target would be to come back down to the $23,000 area. Now, we did close yesterday's candle just above 23,500 at 23,516 here on spot price action. So as it stands right now, getting a bounce in that area is what I wanted to see. Now, in order for Bitcoin to remain with upside here in the coming days, it must, in my opinion, hold 23.5. At worst, the point of control here at 23,000 or 22,913. If 23.5 is lost, I'll be honest, I do think that we run back to the range lows here, which would beget another test of this high area over here. Of course, these lows here, we might even see a pit stop around the 22.5 to 8 area. But in reality, a lot of the higher time frame momentum oscillators will turn down, and we will take a look at that in just a moment. I'm actually not getting any monitor feedback here. Hold on 1 second. There we go. All right. Felt like I was talking in a sound deprivation chamber here. Okay, so when looking at the 4-hour, the area to regain now for potential further upside and to not only run the current highs but possibly higher would be 24,285, that wick low. And I would kind of make it a zone, because if we see a rejection, it's probably going to come in around that 24,600 area. So we can draw the box out here. That'll be the kind of target area to the upside. Should we see, the value area high around $24,000 regained, which would be, these wicks over here and above these candle closures of the high, then I would be looking for a test up to around that 24,285, 24,500, 600 area. If that area is successfully regained on something like a 4 and a 6 hour time frame, then I would be looking for follow through to the current wick highs, which are now going to be right there at 25,250. And when looking at this, this is a picture perfect swing of this high here. So Bitcoin's kind of in a dangerous spot, because if this is going to maintain its potential upside, we need to see daily starting to close above this wick high, and then subsequently a weekly above there to really raise those targets. Now, those targets aren't going to be raised if that is unsuccessful. As we go through some of the higher term time frames, you'll see what I mean, especially with the 5-day and the weekly. Now, we have preserved some of that momentum to the upside with this nice move back up, this really nice bounce. But it's all about where does the retracement land in these lower term time frames. So let's go ahead and kind of compare this to the Bollinger Bands here. So you can see that right there at the point of control is the 20 simple. So if we bring in our point of control here for this range up here, it's actually taking and combining the two ranges so that we can get a little bit wider data set. But you can see that below there, there's not much volume. So below that 23,000, 22,900 area where the 20 simple is, it's going to be a pretty quick trip right back to these lows in and around here at around 22.5 to around the lower $22,000 area, 22,000 to 22,126 in this case, the first standard deviation to the downside. And then we can also see that the second standard deviation to the downside there is coming in right around the wick lows there at 21,337. So I would still be looking for that 21,000 to 21,002 to be a bouncy area. But the more macro time frame picture begins to change for this range. And unless Bitcoin can track sideways and reaccumulate in this area, we may in fact see a leg down before any other leg up. So I want to be very clear about that. Now the conditions really are going to be below 23.5, especially on a daily closure. I would say probably going to spell a trip to the range lows pretty quickly, and then the possibility on top of that to see a move lower. And but as long as things are above $20,000, I think it does preserve the current bull run. And now, let me be very clear: bull run is not bull market. Bull market is not going to be until we, our demand is outstripping supply, and we're starting to pick up to the all-time highs again. And realistically, we got to get above $25,000 on a close on the weekly, and then kind of evaluate from there, as the weekly is, it's kind of getting up there in terms of momentum. So this little pause might do it well, but it also presents the potential for downside. Now we are seeing a pretty nice bounce on this particular daily open. It's all about where does it land by end of day. So let's go ahead and hide drawings here for a moment and look at the momentum pivot for the daily here. And we can see that the momentum pivot is coming in at 21,850. So above there, Bitcoin's still got pressure up from the daily. But as we go down the time frames, you'll see how that picture could change. And I do think it's going to be worth watching the 12-hour in the next couple of closures. So I would say probably 2 to 3 closures of the next 12 hours, so the next daily, this daily candle into the Saturday candle in this case. Now the 12-hour does have some room. It's sitting at 22,700 or so is what I would call this, depending on which exchange you're using. And in this case, 22.7 above there, pressure up remains to the upside here on the 12-hour. The 8-hour, we're looking at a pivot down. So it is pressure down on the 8-hour with, well, it's fairly aggressive, but Bitcoin's been moving in large chunks here lately. So 24,800 is going to be the momentum pivot there. The 6-hour is also pointed down now. 25,100 would be the number to turn that back on up. The 4-hour, $25,000. The 3-hour, we're looking at 25. The 2-hour, we're looking at 25,144. So pretty heavy pressure down here. and the hourly I think is getting down there into the oversold zone. And but the momentum pivot is pretty far up there right now at 24,100. So that is to say, $24,000. If that is regained, obviously that was one of the criteria that I just talked about earlier on the 4-hour chart. When looking at price action here, you can see that 24,283 is going to pretty much line up with the areas that I marked off. Let's go ahead and bring those back. You can see that the first standard deviation is coming right in at that wick low at that 24,286 and above $24,000, which is the value area high for this range. Then I would expect that area to get tested. And I would still be looking for the possibility of failures below that 24.6. If you do see $24,000 regained and 24.6 fails, and the higher term time frames like the 12-hour start to turn down, 8-hour continues with its downside, then I would expect 23.5 to get tested again, and then subsequently $23,000 in that order at the point of control, and see how price reacts. If it gets bought back up intraday above 23.5 and price can close above there, that still preserves the chance to run the highs yet again and still possibly higher. That's not the picture that's being painted in some of these lower term timeframes right now, but that's the criteria that would need to be met to run those highs again and possibly higher. And of course, I do believe that below 23.5 on a daily closure especially, then we are going to run those lows again of this current range. So we're talking down here around that $21,500 to $22,000, possibly lower. But until we actually see a break of around that 23.5 area, then we can evaluate that. Right now, it looks pretty bearish. That's bulls gave up quite a lot of that move up. So as I said yesterday, in and around those highs of the daily, between the second and third standard deviation, we may just track, we may just be stuck in a range for a little bit before Bitcoin actually determines direction. And I'll be honest, you would think that, okay, well, the longer that it stays here, then and keeps grinding up against this resistance, that it has the high probability to go up. But in this case, running out of momentum on some of these longer term timeframes, I do believe is going to provide some pressure down. And, so Bitcoin's kind of on the clock. It's got to get through this resistance overhead in order to hit some of those further upside targets. Otherwise, it's going to be a trip down. And where it lands, we'll have to evaluate as it goes. Now, when looking at some of the higher term timeframes, we'll hide the drawings again here and take a look at let's look at this here, because this is what's going to be interesting as well. There's a lot of bearish divergence potential, as I was speaking about yesterday, up to all the way to like 30, in this case, all the way to $33,000, $34,000 now, because it updates this it recalculates every close. So there's going to be a more major reversal on those longer term timeframes, and this is where we're going to start seeing it. So I do think that, honestly, if Bitcoin fails to get through this area, it's going to have to take a trip to the downside. Now, the 2-day also, bearish divergence is building, not confirmed. Okay, there is quite a lot of it building up, though. The 3-day as well, there's the potential here if a 3-day high is put in. And the same for the 5-day and the weekly. So it's right on the razor's edge. If it can close a little bit higher, it can avoid these longer term bearish divergences. And these would be in trend regular bear divs. Okay. So these are a little bit more powerful than the hidden bearish divergences because they are in trend. They usually signal at minimum a short-term trend reversal. And that's where we can derive some downside targets. From there, if we do see that. But in this case, it's got to break the range highs above 25,250 here on Coinbase, it's gotta breach that and close on it. Not just a daily. I think it needs to close a weekly up there as well. Otherwise, it's probably going to push up further, maybe intra week or something, and then probably a pretty nasty retrace from there. And to be quite honest, for those that were buying the breakout here, they got screwed. That's why you don't buy the breakouts. I had a stream that I left live overnight where I had mentioned, the target there at 25,250 to 25,500 as being the overhead resistance, and to watch carefully. And then I mentioned the 23,500 to the downside here, which is where we're getting our initial bounce from. So when kind of going back and looking at that, that call is derived from the Bollinger Band setup and the volatility setup. So let's go ahead and actually take a look at volatility here as we go through some of the higher term time frames. So we do still have expanding volatility because we expanded to the downside, bounced off the lower end of the Bollinger Bands after getting a move outside of the second standard deviation to the downside here. We held the second standard deviation after trending below and trading below the third standard deviation on one candle, poked at it again, came back up and closed above the second standard deviation, then held it as support, regained the first standard deviation, and then BBWP had a choice. If we consolidate around the 20 simple, the Bollinger Bands begin to contract. We see this start to contract, but because it closed above the first standard deviation to the upside, that maintained the high volatility environment, and we pushed on through to the between the second and third standard deviation. In this case, on the daily here, closing below the first standard deviation there. Not too inspiring, to be quite honest. Now, the 2-day, we can see that we nearly tapped on the second standard deviation to the upside here after closing above the first standard deviation, and then we closed back below the first standard deviation. Now, I would say if this rally starts to fall apart, we need to look back to these lows. That is where we're going to see that 20 simple coming in around that 22,150 in this case, another number that we just spoke about earlier. And then the first standard deviation to the downside at 20,500 coming in right at this first big higher low after we got this little bit of a higher low off the actual macro low down there. So I'm not calling it a macro bottom, as a macro low. Now, it's still, I think we need to breach 25,250 on a weekly close for us to consider this, to even have it in consideration for becoming a macro bottom or the bottom of the cycle. That's not in play yet in my book. But, the opportunity is obviously there right now. Now, the 2-day, which closed, or is going to close today, had that initial cross up towards the K into the D read here on Stoke momentum, and now the 2-day pivot coming into this next 2-day closure is going to be 24,635. The 3-day, which we are going to be closing with today's daily candle, so we got a 2-day, 3-day closure coming in. This is also going to be around that $24,000 area at 24,325. We'll call it, close above there. Looks pretty good. The 5-day is closing in 3 days, and that is pivoted now at 24,677. Because of where the wick went, it actually increases the number that's needed to shift momentum back to the upside. And the really important one's going to be this weekly here, 22,244. In this case, below 22,250 on the weekly. We're going to get our initial cross down on momentum here. Probably start seeing this this BBWP also cool down and get closer and or cross over the moving average here. And in this case, I'm still looking at the supports because on the weekly, provided we don't just dump right out to like the macro low that we just put in and retest that area, we have support under us. $22,000 worth of first standard deviations coming in. Obviously, that's the lows, which I do think will get run if we drop 23.5 on a daily. And then we've got 19,305. Now that 19,305 upon weekly closure is probably going to move closer to around the $20,000 area, probably coming in line with the lows over here at around that 20,000 to 20,500 area. So that's kind of the look that I've got on things right now. Pretty easy analysis. Nice volatile price action. If you're able to get in on it, very good trading to be had here. Now, if we go really low time frame here and turn on volume, you can see that we set a 15-minute low. So it's all about maintaining this current 15-minute low on these lower term time frames right now and regaining some of the range lows up here around that $24,000, specifically this area up here, and regain the breakdown candle here on the 15-minute. That was this guy here. We tried to maintain this closure for this range over here. And then we have a breakdown candle. Now the open of this breakdown candle, what do you know? It's coming in at $24,065. So on lower term time frames, things can come all the way back up. For instance, you can see on the Bollinger Bands here, come down trending in, below the second standard deviation, in between the second and third standard deviation zone after getting that initial pop down below the third standard deviation here. Mean reverted back to the first standard deviation and began to trend below the second standard. Now it's come back and it's regained the first standard deviation to the downside here, giving us targets. And the targets are pretty much a range. This thing can, on the 15-minute, can come all the way up to around the 20 simple, which is at $24,000, funny enough. And then a retest of around where? 24,390 in this case, 24.4, all the way up to that second standard deviation. Now, why am I calling this out? Because right now, this move back up would be cooling BBWP down on any closures below that first standard deviation. And that first standard deviation is 24.4 right now. This is going to keep ticking down, but until it regains the first standard deviation to the upside and then subsequently the second standard deviation, what you'll see is BBWP will cool down as Bollinger Bands contract, and then it will re-expand if Bitcoin can maintain closures above the top side or the strong half of the Bollinger Bands, above that first standard deviation, especially above that second standard deviation. Now the 15 minutes got plenty of room to go up right now, 23,557. Now, where's 23,557? Well, that's below the first standard deviation here. So if Bitcoin loses the lower side here at that first standard deviation, looking to probably retest around that 23,500 area and possibly even down to those wicks at 23,344 here. And in this case, I'd be looking at lower term timeframes like this 5-minute, which, as you can see, as it rose and has tried to regain that first standard deviation to the top side here, it has cooled down. The volatility metric here being Bollinger Band width percentile, or BBWP, but you can see that momentum has started to shift, and we have the momentum indicator here being a regular Stoke, pivoted at 23,760. So if that area is regained, that'll turn back up. But right now, it's looking to come back down and try and find support here. You can see the VWAP ATR kind of showing the main support area there at 23,650. If that is lost, probably going to start coming back down and retesting in and around these lows. Maybe a little bit higher than them from the 5-minute time frame, but as it stands right now, it's still pressure down. I mean, even 30 minutes probably just starting to bounce. The hourly is still pressure down. So let me go through some of these 2 hour, we had set pressure down 20, 25. So it's got a lot of room. Bitcoin's got to go sideways here and try and preserve or slow down that downward momentum for the next, I would say, 4 to 6 hours, and then see where that hourly can bring things. Because right now it looks pretty bearish, but that can change pretty quickly. So yeah, that's going to be Bitcoin spot price action with a few extra tips in there for how to read your bull bands. And for those that aren't familiar, the first standard deviation is the inner band here, the teal band, top and bottom, second standard deviation, and the blue band up top is the third standard deviation. So I'm going to actually do a dedicated video to post here on Twitch and on YouTube that's going to go over how to use it, what strategies to use, which indicators to use for it to kind of filter out different signals, false entries, stuff like that, and kind of walk you all the way through how to read this and use it with the volatility metric and divergences, SR levels, all that stuff. So that will be coming soon. Let's go ahead and take a look at CME here. Now CME also is trading below the first standard deviation right now on the daily. Big gap down. So CME closed at 24,640 and gapped all the way down to, it gapped down to, where did this actually gap down to? Let's go ahead to the 15-minute here. So the 15-minute shows that it didn't really gap down too far, right? Where's the open here? 24,080. This close was, okay, so it did gap down about $500. So, hey, it is what it is. That gap, again, 24.5 area. So 24.6. And just as a reminder, 24,300 to 24,600. That area is now, as you can see, that's the retest area for CME. So if it does get rejected there, that's going to be pretty darn bearish. I would, at least if it gets rejected there, I'd be looking for it to head back to around that 23.5 at least and retest it. Again, if that area is lost on a daily, I do think that $23,000 area, not only will it get hit, but most likely over time break down if it didn't just break down in one shot. So you can see here swinging into this area, which is the bull band high there and the actual highs of the range here. CME actually wicked up to 25,345. Where did spot get to? 25,256. That's right. So where does momentum stand here on the daily for CME? 21,762. Not bad. So there's still plenty of room on CME for upside from the daily. But of course, as price, heads down, the momentum pivot keeps heading up. Then you have the momentum and price compressing together. This would eventually turn down if that were the case. The 12 hour is going to remain with upside on CME here on any closures above 22,770. Let's compare that because the pivot for spot price is 22,700. Okay, because it is tracking pretty well because we're midweek, and CME has a bit of a premium over spot price action, running about $100 premium right now. A little less. 8 hour pivot's going to be 24.50, trading about $200 below currently. 6 hour pivot's going to be $25,063. 4 hours going to be 25.82, so above 25,100. That would turn back up. 3 hours going to be 25.50. 2 hour we're looking at 25.56, and the hourly heavy pressure down 24,618. So Bitcoin's got some room for volatility on those really low term time frames. if we do start seeing that 24,000, 24,300, it's probably going to get tested, at least that 24.3 to 24.6. It's also where the intraday gap is from when CME remained closed for that hour versus spot price action, which just trades all the way through the sessions. So now where does that leave the 2-day here? 2-day still pressure down below on any closures below 24,472. And in this case, we're not going to be closing another 2-day for 4 days because this is the Friday candle. So 3-day, we're closing with today's daily candle. And this is going to be pressure down on any closures below 25,000 because of where that wick landed. And the 5-day on CME is closing next week. So quite a bit of time because CME does not trade over the weekends. So the weekly is what is going to be incredibly interesting, not just for spot price action, but here on CME as the weekly momentum pivot moved up intra-week to 21,111. So it did move up slightly. That does mean that the weekly is probably going to leg up to around the lows of this range, maybe even a little bit higher because of where the wicks came in. So coming into next week, we're going to have to watch this weekly, see if it begins to turn, and the 5-day as well, which will close next week, but that's closer to 23,000 there at 22,990. So basically, Bitcoin's got to break through very soon. It's got to break through the on a weekly. It's got to break through the 25,250 area on a closing basis. So if it does not, I do think that we're going to see, a little bit more of a retracement. But again, I'm not looking for like doom shots to 10K. In fact, I don't think that's possible without consolidation. At worst, the weekly's playing in a range on the Bollinger Bands here again, below that 21.8, which is the first standard deviation here. Then we're probably going to head down to around $20,000. And if Bitcoin can maintain above $20,000, then I do believe that that's going to provide the opportunity for Bitcoin to take substantial legs up over the coming weeks and months. And then I do think that there's like a pretty massive retrace in the cards. So now this is going to kind of depend on what's going to happen with traditional markets here, as they had a pretty hefty pullback yesterday. So I'm going to quickly glance at the dailies here on traditional markets. So yeah, Dow is testing the downside first standard deviation here. This is very low volatility. So this is the setup right here. This is actually a pretty bearish setup right now. Stoke is pointed down, and 33,964 needs to be regained for the daily Stoke to turn back up. So daily momentum to turn back up is basically 34,000. Now 34,000 is right around the top side first standard deviation here. So anything back above the 20, it's actually more around back above the 20. Anything back above the 20, that's 33,900. That would start to change this picture a little bit. Right now, Dow is kind of in a range, and it's been crawling its way sideways and up. But if it does close below 33,688 in this next daily closure on Friday into Monday, we're probably going to see things head down towards that second standard deviation. And when doing so, we're probably going to see we got a bigger move coming. And in fact, it might already be started. We see that BBWP is rising because Dow is closing below the 20 and right on the first standard downside deviation. So expansion is going to start, and the moving average is picked up here. So we are ever so slightly expanded. I would say that we need to close under there And we got to see this getting a little bit more of a pop up on volatility there. But below that first standard deviation, we're going to see more aggressive expansion along with the moving average following pretty closely behind. So, and if the Stochastic is also pointed down, obviously we're closing below there. And then that's going to start expansion to the downside here. I still do think that it can hold its lows and probably will pit stop around that 34 or 33 and a half at the second standard deviation, all the way to that 33 265. But that does, make some of these longer term time frames a little bit more bearish, as the 2-day is turned down on any closures below 34,099. 3-day is going to be headed up still on any closures below 33,731. But the next closure, this is going to get an initial cross down. I don't know when this one's going to close with today's daily candle. Now, this isn't open right now, but it's still counting it down. And then, of course, we've got the 5-day that is already pressured down below 34,381. And that weekly is going to be a big one here, as this is 34.47. And it's a good, 600-700 points away. Now, when looking at NASDAQ, we can see that NASDAQ also rejected staying above the first standard deviation to the upside. It's got a little bit more support around these lows, but if it does run these lows and fail there at 12,286, it's going to be down to around where that the VWAP ATR is there at 12,133, so basically 12,100, to around this 12,000, just shy of 12,000 here on the daily. When this opens up, it's probably going to be around 12,000 for NASDAQ, for standard deviation to the downside. And then, we've got a lower high. If we take out that low, we've got a trend. Pressure down in any closures below 12,558. It did close below there, so that is already fulfilled. 2-day, 12,787. 3-day, which is going to close today, any closures below 12,647 will turn this down. Of course, trading about 200 points below. That 5-day, which is going to be next week, is right there where the daily first standard downside deviation. So the Bollinger Band, first one to the downside, is there at that 11,900, 12,000. And then the weekly is at 11,866. So I would expect bounciness, but if they do start to turn, markets are looking for some downside. And judging by the way that Dow may expand, it's not totally confirmed yet. Need to see that first standard deviation close below at minimum, and still need to evaluate even from there. The really powerful trends don't start until you're outside of the second standard deviation on a closing basis. And then you tend to trend up against them and use the first standard deviation as the pivot, or as the support or resistance, depending on which direction price is headed. In this case, SPY also closing below that 411 pivot. We do see fairly low BBWP. It's not super low right now, but if this 407 is dropped, subsequently needs to hold that low at around 404, 405. If that area is lost, first standard deviation is not very far away at 402. And we would start to see expansion to the downside, or volatility to the downside in this case. But because BBWP is sloped very heavily up, it does kind of limit the downside here. So I would be looking for longer term time frame higher lows in this area, down to around that 390, which is where this pretty major low was set in that helped propel things up. But around that 396 to 390, below there we would see expansion of BBWP, and if Stoke would be facing down at that point and would get follow through. The 2-day is pivoted at 417, and again we're looking at around 400 points, 397 to 400 points. This is kind of a mean reversion play when looking at the 2-day because of this bigger structure coming off the lows. And So I still am biased towards higher lows, but it all depends on how these dailies start to play out. The 3-day, same thing. Now this will have the potential to turn down on any closure below 410. And then we've got that 5-day that's at 407. Very close price action, can nearly turn down. And then the weekly is at the same area at 407.50. So that is, and let's look at the weekly, because I do think it's worth looking at the weeklies. The 20 simple is that 391. That is the current, and it will not remain the current, but it's the current daily third standard downside deviation. So if we just mark that, and we go back to the daily, you can see that that's coming in right at the third standard deviation to the downside. So that area I would be looking at as a very bouncy area, but just know that momentum would start to shift and the bias would be for more downside pressure, but we can see that we've been kind of bullishly resetting, and you can kind of keep bullishly resetting on these weeklies when you have monthlies that look like this. Now, the monthly would fall apart on any closure below 360, so that is something to be aware of. Same thing for NASDAQ, but that's all the way down at 10,814. Pretty far away for the monthly. Doesn't mean it can't get there in the next, 12 12 days, which 4 of them are not trading, I believe. And then the Dow Jones pivot is going to be 29,303. So there's a lot of room for things to go sideways and chop within a very large range when looking at traditional markets right now. When looking at something like Dixie, we've got the monthly still headed down below 112. So this is where the more macro time frames are very, very important for Dixie as it relates to traditional markets and Bitcoin. And that's because it's in a bearish retest mode. When looking at the daily, in fact, it did try to push up above the highs, and now still is going to have the ability to retest the overhead resistance here. It's even coming in right at the second standard deviation is where my resistance line is coming in at that 104.60 area. But retesting this area here, anything below this last high over here at 105.63, I'm looking at as being a significant bear retest and potentially, back to the lows and then try again up later. If it does make it through here, then I'd be looking at the 107, 108 area. And subsequently, possibly a retest of, 109, 110 around here. That's significant resistance, and I'd be looking for lower highs based on that monthly. And I do think the quarterly turns down in the next quarter, at least initially. The quarterly is currently pivoted at 131 cents. And that's actually the area that the daily went and tested, was that quarterly momentum pivot. And the daily actually, no, it didn't quite test it, but very, very close to it, 182 cents. So very, very close. I would expect, in the next quarter that that momentum pivot's going to keep moving up as price compresses down on the quarterly chart here, and probably going to be at or above wherever current price action is for Dixie, which I do think provides a more long-term view of Bitcoin and traditional markets with the ability to go up. And you might be thinking, but all the news says that all these metrics are coming out and they're terrible, and consumer debt's the highest it's ever been, and defaults are up, and real estate is starting to show its cracks, and there's layoffs all over the place, and Well, you got to remember that markets are disconnected from reality, and there is liquidity flowing in other countries like China and Japan. And guess where they invest? So, dollar loses dominance. Then where's that liquidity flowing to? All the money that is that was printed is not destroyed. And I know they call them dollars destroyed, but they're not really destroyed. They are missing in action, we can call them. But that liquidity basically is still there. And it's just that it's not in the pockets of you or I or anyone else. It's in the pockets of the bigger players and the central banking system in most cases. Now we have Japan, China, and a few other countries that are printing. They're printing, they're bond buying, they're doing all kinds of stuff. So it is, there is liquidity flowing, and it's really the Western nations that are tightening and still tightening. And we're in a very tricky situation where inflation is like buying power. Oh, spending is up. Well, spending is up because everything's more expensive. So that is, whether it's going out to eat, like dining was up and like all these other things. It's not because more people are going out. It's because food's way more expensive. Just going out to eat eggs, way more expensive. So that's going to be the main gist of everything I've got to say to you guys today. The big area to the upside here, 24K. The value area high on the daily, also above the first standard deviation on the daily. We're going to go test around that 24,300 to 24,600. If things fail around that 24, even 24.5, 24.6, then I would expect to go back and retest the wick low area that we just put in, or somewhere around 23.5 to try and find support. If that fails, $23,000. And then we start looking down towards those range lows, $21,500 to $22,000. And then 21.2 is the big area before dropping to the lows over here at around the mid $20,000 area. 20,500, 20,800 be the next targets to the downside down here. So keep a close eye on it. Right now it is all bearish retest, but the 15 minutes got some legs to try and go back up. So we'll see. We'll see what happens. Actually, one last thing we'll throw on high time frame liquidity. We will turn on kind of the more important ones to the 15-minute here. We'll turn the this other stuff off. We'll keep the 4-hour on so we can see. Yeah. So the last big 4-hour pivot is actually a little bit higher at the 15-minute third standard deviation to the upside here. So I don't think it's getting there without some consolidation. As long as it holds the lows, it'll have the chance to test that area, but need to see 4-hour closures above 24.6. And then I think this would be a little bit of a trappy situation for the bulls. All right. You all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe and, of course, stay safe. As always, with all of that being said, well, Landy out.